Welcome to episode 188 of AAA Weekly Webinar Series. Today we are discussing petition under Section 9 of Insolvency and Bankruptcy Code. We would deliberate about various reasons where the application can be unsuccessful and the basic requirements where the application can be successful. This episode is very important for all those who have some interest in insolvency and bankruptcy code. While we have already discussed similar subject for section 7 petitions in our episode number 187, which was last week, and today we are discussing petition under section 9 of the IBC. Before we go ahead, it is very important to understand this section 9 is basically applicable to all those creditors who are called operational creditors. These operational creditors are those who are defined under section 5, subsection 20 of IBC. I will read the definition. The operational creditors means a person to whom an operational debt is owed and includes any person to whom such debt has been legally assigned or transferred. Even those creditors who have taken the assignment will also be considered as operational creditors. Now we go to the definition under section 5 subsection 21 of IBC, which is the operational debt, because in the definition of operational creditor, it is based on the operational debt. So now let us understand what is operational debt. The definition says means a claim in respect of the provision of goods or services. Anyone who provides or sell goods or services, that is where this section 9 is applicable, including employment. Even employment is also considered as service, or a debt in respect of payment of dues arising under any law for the time being in force and payable to the central government, any state government, or any local authority. So the basic operational creditor includes anyone who is supplying any goods or providing any services or even doing service with the company, or any kind of dues, maybe tax dues or any other kind of dues which are due to central government, state government, and local authorities. Now, Ankit, one thing that I would like to ask you, these local authorities, what exactly it would include? My specific question is that there are various limited companies which has been owned by government. It can be state government or it can be central government, where the dues are payable. So whether those authorities which are limited companies, maybe it is owned by any government, maybe local government or state government or central government, would that also be considered as operational creditor?
So, local authorities as a terminology is used for the purpose of defining or includes the municipal corporations and panchayats that are created. So, in our country, we have this constitutionally provided that apart from the central government and the state governments, there will be local governing bodies, whether it is for cities, municipal bodies, and for villages, gram panchayats. And these are what are local authorities which are mentioned here. I do not, I'm not under this impression, or neither do I don't think that the companies or corporations created by state governments are part of local authority.
Good. Thank you, Ankit. Now, you see, the application needs to be filed in Form 5 of IBC Application to Adjudicating Authority Rules 2016, and it has to be along with the requisite fee. So there are basic requirements of filing this application. So one requirement which is very important, that is a statutory notice, or you can call it as a demand notice under section 8 of IBC. That demand notice can be in Form 3 or it can be in Form 4. In Form 3 is applicable to those cases where the invoice is not available. So where invoice is not available, so that means it can be the employment or it can be even the tax dues. And where the invoice is available, that is the notice in Form 4. So this notice has to be given by the creditor to the corporate debtor before any insolvency can be started, and this actually is the trigger. This is the first day when the creditor decides to go for insolvency of the company. That is the first demand notice which will go. Now, this demand notice, Form 3 or Form 4, it actually will give 10 days time to the company. So within 10 days that the company has to revert back, and revert back only on two things. One, whether the amount was paid or not, maybe before the notice or even after the notice. Second, whether there is a pre-existing dispute. Now, the pre-existing dispute means before the date of that statutory notice. In case the dispute is reported after the date of statutory notice, that would not be considered as a dispute, and that dispute uh, argument would be dismissed, and the company can be admitted to insolvency. Now, Ankit, in this case, what we basically trying to understand, the application can be filed by those who are suppliers of products, services, employees, workmen, authorities, maybe against tax dues or any other kind of dues. Applications can be filed, and the only protection to the corporate debtor is that one, that proper notice is given, demand notice, and the second, that there should not be a pre-existing dispute. So what are the other documents, what are the other basic requirements that, Ankit, can you just appraise everyone, all our to our audience?
So section 9.3, it talks about the basic documents that are required to be attached along with the application to NCLT seeking an order to initiate insolvency against the corporate debtor, which is the creditor. The corporate debtor, which is the debtor. So, copy of invoice demand notice served under section 8 is, of course, the primary document that comes first. Then we have an affidavit confirming that no notice or dispute has been received from the corporate debtor. So, that's an affidavit that is required to be attached. Then we look at this, there is a requirement which says certificate from financial institution maintaining creditor's account confirming non-payment. So this is a requirement which is part of section 9.3. However, we have a judgment by the name of Macquarie Bank Limited versus Shilpi Cable Technologies, which is again a Supreme Court decision. And this had clarified that 9.3c is directory and not mandatory, because this certificate sometimes becomes a difficulty for a bank to give, and where the bank is not able to say that I have confirmed a period of bank statement and I confirm that this amount has not been received by this company. So it becomes a difficulty sometimes. So that's why it was made directory and not mandatory. Then there is a requirement that a copy of any record with IU, that is information utility, confirming no payment of unpaid debt. So here again, regulation 21A of IBBI information utilities regulations provides that before filing an application to initiate CIRP under section 9 or 7, as the case may be, the creditor shall file the information of default with information utility, and the information utility shall process the information for purpose of issuing record of default in accordance with regulation 21. So this regulation combined with the requirement under section 9.3 requires the record within the IU. However, we have some judgments here. we have a case titled Vijay Kumar Singhania versus Bank of Baroda, where a judgment dated 13th of December 2023 held that NCLAT where NCLAT held that furnishing the record of default is not mandatory for application under 7 of the code. Then, relying on the same, the NCLT in the case of Ganesh Ramkisan Rajale versus Panchtatwa Milk Industries Private Limited held that furnishing record of default in IU is not mandatory for application under Section 9 as well. So this way, this requirement was also dispensed with, which was earlier provided under Section 9(3).
So once the application is filed before adjudicating authority, with all the documents, as Ankit has said, now let us understand the role of the adjudicating authority, that is NCLT, whenever an application is submitted under Section 9 of IBC. The first and foremost is the NCLT will understand whether the application is complete or not, and whether it is in a prescribed form or not. Secondly, whether this demand notice was properly given and served. So in case the demand notice is not served, that also can be a reason for dismissal of petition under Section 9. Third, the NCLT, adjudicating authority, will also consider whether the payment was made or not, whether the payment was made even before the application is submitted, before the demand notice, or after the demand notice, whether there is any payment submitted or not, and then whether the default has been established. So the first thing that the NCLT has to see, application is complete, the demand notice is given, and the third thing that is very important is whether there is a operational debt or not. Now, let us understand the operational debt. As we have already explained through the definition, the operational debt is that in case it is a question of supply of goods or services by a vendor, then there has to be an invoice. And also there has to be other proofs of delivery of goods and services. We'll come to that later. Secondly, with regard to the other operational debts, employment, there has to be employment documents, there has to be evidences that yes, there was a debt, there was an employment, and there was a due on account of salary or on account of wages. And in case of other government dues, there has to be an order where the government has asked for that kind of dues. So this is something, these are all the documents the adjudicating authority will verify whether there was a debt or not. After the debt is established, then the adjudicating authority will see whether there is a default or not. Now, for example, a employee will get a salary maybe on 7th of every month, and in case he files his application on 1st when the salary was not even due, that means that there is no default. Similarly, a person who actually is having, as per the traditional or as per the documents or as per the purchase order or as per the invoice, he was supposed to get his payment in 60 days, and he filed this application before even the end of 60 days. That means that the default is not even seen. There is no default. The company has that option of paying within 60 days. 60 days is not expired. Similarly, in various government orders, tax orders, or even any other demand orders, there is a condition that the assessee or the taxpayer will deposit this demand in 35 days. So in case that application is filed before that time expires, that means that there is no default. So first is application, then demand notice, then debt, and then default. So we have seen 4 things the NCLT will see, and the fifth, very, very important, whether there is a pre-existing dispute or not. And the pre-existing dispute is a very, very large subject. We'll come to this later on. And also, one very important part, which is also whether this application is mischievous. The basic objective is not the insolvency of the company. Basic objective is kind of recovery of their debt. So these are various cases where the NCLT can dismiss the petition under Section 9. And of course, in case there is any deficiency in the application, then they should give 7 days opportunity to the applicant, although it is not provided in the law, but as a natural justice, law of natural justice, the adjudicating authority should give 7 days notice. So that is where we actually can see. And as far as this malicious filing of petition under section 9, that is also something which is a larger issue, and we'll come to this slightly later on when we have all the judgments. So in one scenario, when this, in the case of Innovative Industries Limited versus ICICI Bank, which was probably the first few cases of insolvency by Honorable Supreme Court, where it has been held by Honorable Supreme Court that the adjudicating authority should be cautious of defenses and not admit frivolous cases. Now, I in fact normally give an example that in case of the government of India has like 9 Navratans. Those companies are very large companies, and somehow in case some of the suppliers, some of the employees are not getting their payment, so in case they go to insolvency, so that would be considered that the basic objective is not to go for the insolvency of these companies, because these are large companies, these are healthy companies, these are solvent companies. But the basically it can also be considered that the intent of the applicant is not resolving the insolvency of the company, but it is the recovery of his dues. So that also can be rejected, subject to various other like documents. See, in the case of Mobilox Innovations Private Limited versus Kurusa Software Private Limited. In 2018, in fact, the Supreme Court has laid down a threefold check as role of NCLT for admitting Section 9 petitions. One, it is said, is there an operational debt that meets the minimum threshold, which is presently 1 crore. So that is the first test. Second test is, has proper evidence been furnished showing that the debt is due and unpaid? So that is what I said, that there must be a debt and it is unpaid. Unpaid means there is a default. So these two things are covered in the second part. And the third is there any existence of pre-dispute or record of pendency of any suit or arbitration before the demand notice is issued? Now, once these conditions are satisfied, then the application should be admitted. And if these conditions are not satisfied, then the petition is liable to be rejected. And also, the presence of dispute is an absolute bar to admission. If there is a dispute, that is an absolute bar on the admission. So therefore, it is very, very important that we should understand the prerequisites for filing of Section 9 petition. One, the minimum debt threshold. Minimum debt threshold is 1 crore, and that is even including principal and interest. In some cases, we have various disputes regarding principal and interest, whether the interest would be payable to the creditor or not. There are many judgments. We will try to cover few of them if the time permits. But yes, as far as the debt is concerned, that debt will include principal and interest for meeting the threshold, which is the threshold of 1 crore. Now, I would again, because see, this is something that the Ankit is also practicing as a chartered accountant, so he would actually use his acumen to give various tips how the debt can be proved. Because in some cases, the operational creditors are not having some evidences. So the Ankit, can you just appraise our viewers what all practical part that we can use when we are kind of establishing debt and default?
So, to acknowledge debt and acknowledge default, let's talk about acknowledging debt first. So, for operational debt to be there, one entity must have provided some kind of goods or services to the other entity, and that's normally provided through an invoice or under the cover of an invoice, along with the proof of physical movement of goods. So, basic documents would normally include an invoice maybe an e-invoice generated from the GST portal. It will then include the proof of movement of goods, if there is any, including a delivery challan or including e-way bills. These are the documents that will prove supply of material or supply of services. And of course, acknowledged invoices from the other side will be proof that these services or goods have been accepted and they were received in the premises of the corporate debtor to whom this was supplied to. Other evidences that can come out are TDS deduction and their reflection in Form 26AS. So we have a case law also in this case. We have an NCLT observation in the case of E-Complex Private Limited versus Swan Defense and Heavy Industries Limited, a case which is dated 25th of September 25, a very recent case law. It observed that TDS deductions were reflected in 26AS forms. These communications evidence the debt's existence. So, we also have an NCLT judgment which acknowledges that 26AS form showing that TDS was deducted on an expenditure is also evidence that this debt was acknowledged, this debt was accepted, these invoices were accepted by the company and therefore they are deducted TDS. TDS laws require TDS to be deducted by the payer on receipt of invoices or payment, whichever is earlier. So even if these invoices have not been paid, statutorily there is a process for them to be the TDS can be deducted on receipt of invoices. TDS can also sometimes be deducted on the provision for such expenditure. Then we come to GST input credit. So in corporate debtor, if the corporate debtor has claimed ITC on the invoices, it would again amount to acceptance of invoices. So yes, this is another evidence that one can establish. The NCLT Mumbai in the case of PMC YM Pharma Private Limited versus Kevin Ventures LLP in a judgment dated 14th of September 2023 found that OC produced GST portal records showing the debtor had availed IGST credit on the supply, which was deemed clear admission on part of the corporate debtor of receipt of material. The debtor's contention that no goods were received was rejected in light of e-way bills and GST ITC reference. So we have another example how the GST ecosystem can help somebody establish the existence of debt. Then we have other filings or other possibilities that we can file. We don't have any judgments here, but we understand that there can be company law filings, including MSME returns, ROC records, maybe even the balance sheet that has been filed by the corporate debtor before the MCA, where there might be a mention or there might be the listing of the debt which is due to the applicant. So these are also important forms. So MSME form 1 filed with the ROC, if it is showing a creditor's name in the statutory acknowledgement, that's statutory acknowledgement. We also have balance sheet entries and confirmation of accounts. So the Supreme Court in the decision in the matter of ILNFS Financial Services Limited versus Adhunik Meghalaya Steels Private Limited in an order dated 29th of July 2025 held that the balance sheets, when read in conjunction with corporate debtors' financial statements, especially cash flows from previous years, constituted as a valid acknowledgement of debt under Section 18 of the Limitation Act, even where the name of the relevant financial creditor is not specifically mentioned in the balance sheet of the corporate debtor. So in case there is some evidence and the corporate debtor is able to come to the not able to come to the court or has to come to the court and say that yes, in my balance sheet I have acknowledged this person as a payable and my total payable balance includes the payment which is pending to the applicant, then that's also acknowledgement of debt. That takes care of the Limitation Act, that also takes care of the acknowledgement of debt. Both can be taken care of together. So balance sheet entries can extend limitation and prove debt. Confirmation of account sent by the CA and acknowledgement by debtor is further proof. So we have a statutory auditor. The statutory auditors these days for larger companies, for almost all audits, write independent confirmation request letters to all the creditors and the debtors of a company. And in case any such correspondence is available with the applicant from the statutory auditors of the corporate debtor, that can again be an evidence that yes, this balance was outstanding in the books of accounts of the corporate debtor.
So with regard to the applications by workmen or employees, one thing which is very clear that petition under section 9 cannot be a joint petition, while petition under section 7 can be a joint petition. Therefore, an individual workman, unless he crosses that threshold limit of 1 crore, the application under section 9 cannot be submitted. Even the employees welfare association or even a kind of union, they also cannot file an application because the joint applications are not allowed. With regard to the applications by workmen or employees under section 9 of IBC, one thing that I have to make it very clear that the joint applications are not permitted under section 9. Although under section 7, the joint applications are permitted. So therefore, few workers or employees cannot get together and file an insolvency application against the company that they work for. Yes, in case one employee has crossed the threshold limit, then he can definitely file an application under section 9 for insolvency of the company. This has been held by NCLT Chennai in the case of Arul Prasad Sanippan versus Vipra Technologies Limited, and that order was very recently 10th October 2025, and it was held that unpaid salary dues of a whole-time director, it crosses the threshold limit, amounts to operational debt, and the insolvency can be started. Now, as I said that the joint applications cannot be filed, this was also held in the case of Kavindra Kumar and others versus Desin Private Limited. It was held by NCLAT on 1st May 2025, and it held as each operational creditor must individually satisfy threshold under section 4 of IBC, which is 1 crore. And the code does not permit the clubbing of separate claims to meet the threshold limit in a section 9 application. It is further observed that provisions of section 7 and 9 clearly indicate that legislature, while permitting the financial creditor to jointly file application, it has not been provided for the operational creditor in the scheme under section 8 and 9. So therefore, joint applications are not permitted. Even NCLAT has also confirmed. In case we have to conclude regarding the dispute, what we can say that the corporate debtor must have failed to pay the operational debt when due, and the operational creditor must then serve a section 8 demand notice to the debtor demanding payment, and the section 9 petition must annex the same. So therefore, this section 8 notice is mandatory, and no dispute is received. So that is also very, very important. So we actually have to now focus on what is a dispute. In fact, dispute can be on invoices, dispute can be on the overall dues. So if the purchase order or if the invoice is not accepted, in fact, Ankit has also explained how the acceptance of invoices can be proved through other resources, like TDS has been deducted by the company, and now the company is saying that this invoice was not accepted. If this invoice was not accepted, how the TDS was deducted? Because the TDS is only required to be deducted when you book the entry in the books of account. That means that invoice was taken in the books of accounts, and the invoice is normally taken in the books of accounts only after it is accepted. Similarly, when you submit your GST returns and you claim the input tax credit, that is also the acceptance of invoices. In the case of PMC YM Pharma Private Limited versus Kevin Ventures LLP. The NCLT held on 14th of September 2023 that the corporate debtor in fact contended that no goods were received due to lack of a purchase order, but the creditor produced e-way bills and GST records which constituted sufficient evidence of supply of goods and existence of operational debt, and section 9 petition was admitted. Proof of delivery of goods, in fact, this was also discussed by Ankit, that the proof of delivery of goods, in fact, that can actually give a big evidence of each invoice backed by proof of delivery. And then if the goods are delivered and it is accepted, I think it cannot be disputed, at least on this point, that the goods were not delivered. Now, the goods, in fact, there are some cases where the goods were supplied without formal invoice. The creditor should present delivery challans, goods receipt notes, work completion certificates, or even ledger entries to show the buyer received and recorded the goods or services. In most of these cases, the supplier could not prove default, because in case there is no evidence of purchase order, there is no formal invoice, then how would you say that this amount was due on this date or on after these many days? So if that kind of invoices, if those kind of documents are not available, you can prove debt, but you cannot prove default. So for proving default, it also has to be proved that this amount was due and it has not been paid. So that is also very important. So we actually can see that the pre-existing dispute has been the largest reason for dismissal of Section 9 petitions. We will actually give you almost 10 such examples backed by judicial pronouncements, what is considered as dispute, what is accepted as dispute, and what is not accepted as a pre-existing dispute. Now, one thing is very clear, that the various petitions has actually gone to even up to Supreme Court. In one very important petition, which normally I say that any Section 9 petition against a government company, and that too a Navratna company, although the petition under Section 9 against a government company is permissible under IBC, but generally the courts are rejecting all these petitions, only saying that there is a pre-existing dispute. That was the reason that the payment was not made. So in the case of SS Engineers versus Hindustan Petroleum Corporation Limited, Honorable Supreme Court in fact has held there was a dispute regarding HPCL biofuels, alleged poor quality of work, breach of purchase orders, improper invoices, delay, and even claimed recoveries from the appellant, multiple letters, debit notes, emails that showed the objections well before the demand notice. The Supreme Court held in this case there was a genuine pre-existing dispute evidenced by correspondence and arbitration invocations. But one sentence which was written by Honorable Supreme Court in paragraph number 31, that was the NCLT exercising powers under Section 7 or Section 9 of IBC is not a debt collection forum. Immediately after that, so first of all, the opinion was framed that this IBC, maybe Section 7 or 9, should not be used as debt collection forum. But in the subsequent paragraph number 32, Honorable Supreme Court said, on a reading of Section 8 and 9 of the IBC, it is patently clear that an operational creditor can only trigger the CIRP process when there is an undisputed debt and a default in payment thereof. If the claim of an operational creditor is undisputed and the operational debt remains unpaid, CIRP must commence. For IBC, does not countenance dishonesty or deliberate failure to repay the dues of an operational creditor. However, if the debt is disputed, the application of the operational creditor for initiation of CIRP must be dismissed. So, first of all, the opinion was framed that it should not be used as a debt collection forum, and in the subsequent paragraph, the Honorable Supreme Court said yes, there was a dispute. Now, in the case of Mobilox Innovations Private Limited versus Cusa Software, we in fact have even discussed earlier also in today's episode. The court held that in case of an operational debt, all that must be seen is whether the said debt can be said to be disputed, and filing of a section 37 of the Arbitration Act petition against an arbitral award shows that a pre-existing dispute which culminates at the first stage of the proceedings of an award continues even after the award, at least till the final adjudicatory process. The court said that the insolvency is not meant to be substitute for debt enforcement. Second time. So the first was SS Engineers versus Hindustan Petroleum. Second is Mobilox Innovations Private Limited, where the Supreme Court has again reiterated that this insolvency should not be a substitute for debt enforcement. An operational creditor cannot simply forego a genuine dispute and use IBC as a coercive recovery tool. In a very important case titled as K. Kishan versus Vijay Nirman Company Private Limited, the Honorable Supreme Court has actually held one part regarding the arbitration cases which are pending, and it overruled the NCLT and NCLAT's admission of Section 9 petition. Now, in this case, the award was passed by in favor of the operational creditor, and the corporate debtor filed a Section 34 petition under arbitration and conciliation to set aside the award. During the pendency of Section 9, Section 9 was filed, and NCLT held that the arbitral award is in favor of the creditor, and that is also a proof of debt and default. Therefore, Section 9 was admitted, and it was also upheld by NCLAT. Now the case went to Honorable Supreme Court, and the argument from the corporate debtor was that against that arbitral award, there is an appeal pending before the court. It has been challenged. Now the Supreme Court says, in fact, while setting aside the admission order, it was held that filing of Section 34 petition amounts to an existing dispute because the arbitral award has not attained finality. Insolvency is not a substitute for debt recovery. Again, only clear, undisputed debt should trigger CIRP. So, this is again a case that if the applications are filed under Section 9 only for recovery, while the dispute is already there, so those applications would be dismissed. So we will actually be bringing to you now a few cases where the applications have been dismissed by courts. In the case of K. Bowett Engineering Limited versus Overseas Infrastructure Alliance India Private Limited, the Honorable Supreme Court said serious disagreements over execution of work and settlement of account was found. Therefore, Section 9 petition was rejected. It was by Honorable Supreme Court. NCLAT held in the case of Innovators Clean Tech Private Limited versus Pasari Multi Projects Private Limited on 9th of July 2025, very recent case. The dismissal was on account that the civil suit that filed between the first and then withdrawn, and the second notices, in fact, concerning the disputes over the supply of goods and services and the payment claimed under those invoices, the same amounted to a pre-existing dispute. So one, there was a civil suit filed before and that was withdrawn later, and the demand notices, the invoices, there was a dispute which was mentioned in that civil dispute. So NCLT in fact dismissed the petition under section 9. Judgment from NCLAT in the case of Chemical Suppliers India Private Limited versus GLS Films Industries Private Limited. Judgment dated 11th February 2025. In this case, a prior police complaint of criminal nature was found, and that was lodged by corporate debtor prior to section 8 demand notice. They can constitute evidence of a pre-existing dispute. Because there was a dispute, then only the corporate debtor filed a criminal complaint against that creditor. In another case, NCLAT, in the case of MROP India Private Limited versus the High-Tech Gears Limited, on 16th of June 2023 held that the services, when the company said that the services were not satisfactorily performed and raised objections regarding the invoices and fee claimed, NCLT clarified that a pre-existing dispute can nullify a Section 9 application only if the dispute was genuinely existing either at the time of replying of Section 8 demand notice or at the time of filing of Section 9 petition. So therefore, this was not accepted as dispute. So therefore, the NCLT said this petition under Section 9 can be admitted. In the case of Khimji Punjab Freight Forwarders Private Limited versus Ingram Micro India Private Limited, NCLAT held that the corporate debtor had already complained that freight services provided by the operational creditor was not proper and disputed the invoices prior to the issuance of demand notice. NCLAT in fact reaffirms the principle that the insolvency process is not a mere tool for debt recovery and should not be misused where disputes are evident.
Coming to the next part, incomplete or insufficient documentation by creditor. So we have already discussed and talked about what are the important documentations that are required to be part of the entire process. So failure to attach mandatory documents can be one of the reasons for NCLT to dismiss a Section 9 application. And we have already talked about how the certificate from financial institution is a directory requirement as held in Macquarie Bank versus Shilpi Cable. We also would like to share that there is a provision for rectification of defects within 7 days, and that is again it's held in Surendra Trading Company versus Jaggilal Kamlapat Jute Mills by the Supreme Court, that the provisions of removing the defect within 7 days is directory and not mandatory in nature. So NCLT is not obliged to give this benefit to the applicant. Therefore, it is very, very important that any Section 9 application must be complete in all respects, have all the mandatory documents, and in case the applicant is able to establish with additional documents like we have suggested, including acknowledgements, GST related documents, TDS related documents, that the debt was in any manner accepted by the corporate debtor, then that should be made out and those documents should be part of your application under Section 9.
So we actually have to now discuss about the limitation part of it, whether this Section 9 petitions, whether the Limitation Act is applicable or not. In fact, in Section 238 capital A, there was an amendment in 2018 which incorporates that this limitation law is applicable to insolvency proceedings. Then, in case the operational creditor cannot pursue a time-barred debt under IBC, the default must be within the limitation period, generally 3 years from the date of default for an operational debt, unless extended by an acknowledgement. Unless extended by an acknowledgement in writing or payment as per the Limitation Act, because there are various sections in Limitation Act which actually says that the limitation period is extended because of these actions or these events of the creditor. Now, first time in the case of BK Educational Services Private Limited versus Parag Gupta, Honorable Supreme Court held that the Limitation Act applies to applications under IBC from the very inception, even for those filed before Section 238 capital A was amended. So that means that the 238 capital A was only clarification. The court categorically stated that the debt which is not legally recoverable due to a lapse of limitation cannot be the basis for initiating CIRP. A time-barred debt is not a due and payable debt in law. So the first condition that yes, there is a debt, but the second condition is not met. That debt is not payable, that therefore no default. When there is the debt is not payable, therefore there is no default. So that is what it held, that there is no intention of IBC to allow a revival of old claims on the pretext of continuing default. So therefore the Limitation Act is applicable. So various applications, whenever we file application, we must see whether the debt is barred by limitation, or if it is extended by any kind of event, any kind of action of the creditor, that can also be seen before we file an application under Section 9. In the case titled as Wasabi Power Services Private Limited versus Promac Engineering Industries Limited, NCLAT held that this is a case covered under limitation, so it cannot be admitted to. So what is the held part of the NCLAT? I would read for you. The proceedings which are held under IBC are to be strictly construed in a straight-jacketed formula, so far as it relates to the aspect and computation of limitation, because period of limitation invariably be in all proceedings under IBC has an objective to be attained, and it cannot be stretched according to the expectations of appellant to defeat the very objective of the Act, which itself contemplates that the proceedings of CIRP has had to be concluded in the specified time frame. So, in fact, various judgment which talks about the limitation. Now, as I discussed, that the malicious or fraudulent petition under Section 65, in case any petition is categorized as a petition under Section 65, it is liable to be rejected, and also there can be a cost which can be imposed on the applicant. Now, under IBC, as a debt recovery threat, that's a malicious intent. In case the intent is only to recover the debt, it is considered as malicious intent. While difficult to prove, it is apparent that an operational creditor filed the petition not for insolvency resolution, but to blackmail or harass a solvent company. The petition can be dismissed and the creditor can be penalized. In the case, as we earlier also we saw this case, Arul Prasad Sanippan versus Wipra Technologies Private Limited, a recent case of 10th of October 2025, the respondent must establish clear and cogent evidence of malicious intent or a designed scheme to abuse IBC. Mere coincidence of representation, or that the same counsel appeared for different parties, or that the appellant acted as authorized signatory in unrelated proceedings, does not meet high threshold requirement to invoke Section 65. The operational creditor attempted to misuse the code as a debt recovery forum despite clear evidence of settlement and ongoing disputes. This was again, so in this case of SS Polymers versus Canodia Technoplast Limited on 13th of November 2019, NCLT held that Section 9 petition filed with malicious intent to realize only interest or for any purpose other than resolution of insolvency or liquidation of the corporate debtor is barred under Section 65 of the IBC. IBC is not debt recovery mechanism. Any Section 9 petition filed for recovery of interest or dues without genuine insolvency intent is barred under Section 65. There are many cases where the debts are not held as operational debt. Would you like to take up this, Ankit?
Very well. So Delhi Control Devices Limited versus Fedders Electrical and Engineering Limited is a 2018 judgment. This judgment is where NCLT said that mere mere default of a settlement agreement which resulted into unpaid installments arising out of that settlement agreement, which is not directly coming in from supply of goods or services, would not be an operational debt. So for any such debt to become an operational debt, it has to be a decree of a court. So in this case, there was no decree of court with the applicant. He only had a settlement agreement and there was a default of the settlement agreement and there was no evidence of the supply of goods or services which was put up by the applicant. So this matter or this case was dismissed as on the grounds that this settlement agreement is not operational debt.
At the end, we would also like to touch base the two amendments related to Section 9 petition under IBC Amendment Bill 2025, which might even become Act in this winter session. One amendment is that the word prescribed in Section 9, subsection 3, the word prescribed has actually been now substituted with specified. So that means IBBI can also or MCA can define from time to time what are the documentary requirement for and what is the information required for filing a Section 9 application. So that is the first amendment, and also the new proviso has been added in Section 9 subsection 5 mandating that if the adjudicating authority does not pass an order within 14 days of the receiving the application, it must record reasons for such a delay. And in Section 215 subsection 3, mandatory submission of financial information with information utility has been prescribed, that a judgment of NCL 80, which was confirmed by Supreme Court, that the record of default before information utility or taken out of information utility is not mandatory. It was a directory, but now in Section 215 subsection 3, it is proposed that an operational creditor shall, before filing an application under Section 9 of the Code, submit financial information to the information utility in such form and manner as may be specified. So therefore, this also will become an act. So any application that we would be filing after the amendment bill becomes act, that will also carry the records and the information available, including record of default on information utility. And the IBBI and MCA will bring out some documents or information which is required to be submitted by operational creditor in the application under Section 9. So we have touched various scenarios where the petition under Section 9 can be accepted and petition under Section 9 can be dismissed or rejected. This is all for today. Thank you very much.
Thank you.